everybody, this is Lorelia coming to you with another video regarding, talking about business credit, but today I'm going to couple it with real estate. And so in my last video, I talked about the benefits of personal credit, why it's important with wealth building. And so today I'm going to expand on this topic. Hey, Brandon, wow, you're always on. How you doing? Thanks for joining me today. So I want to talk about something that some people, yes, thank you. Um, want to talk about gap funding and how business funding and gap funding works together. So what do I mean by that? First, let me explain what real estate gap funding is. I touched on it yesterday, and I promised that I was going to do a video primarily talking about how it works together, how it can work with business credit. And when I use the term business credit, I really mean business funding, but I understand that many people who watch this channel, a lot of you all are not familiar with business funding. You only know business credit. So that's why I titled it as business credit, but I'm really talking about business funding because if you watch my free webinar, I talk about that there are other forms of funding that are out there in the marketplace. Unfortunately, most people only know about the business credit card. So with that being said, let me get to it. So gap funding, what is it and how does it apply to real estate? So gap funding is not traditional funding from a bank. It is money that comes from a private institution. It can be a group of individuals. It can be a private entity that funds real estate transactions. Now, the reason why the money is considered hard money is because the terms are not soft. They're not the terms that you would get from a particular bank. A lot of them are in the double digits. The rates are high. The terms are short. Like I mentioned yesterday, they usually go 3 months to a year because the purpose of the money for those who are lending is to get in and get out. Meaning, I want to lend you money and you give me a return on that money. Because what a lot of people don't know is that money has no value unless it's debt. And I know that may go over a lot of people's heads because you hear debt is bad, but the wealthy know that money has no value unless it's debt. So that is why it is a lucrative market to be a private lender who provides money on short-term transactions in real estate because they know their goal is to get a return on the money. So with that being said, how does it work? Well, imagine you're going into a short-term real estate project. That project can be a fix or flip. It doesn't matter. Remember, short-term, because it is not like you are acquiring the property for 30 years or 15 or what have you. It is the ability to use the money and get right back out. But the thing is that with gap funding, the lender, now you've heard people say no money down real estate. What that means is that no money down, meaning that you may not be physically using your own money, meaning that your disposable money that you have in the bank is not being used. It's not that there is no money being used in the transaction, it's that it's not your disposable income. So what happens is that lenders who provide what's called hard money, they do not lend 100% of the transaction. They only lend up to 70 to 80%. So imagine you're trying to purchase a property that is valued at $100,000. That is the value of the property, the value of it. We're not going to talk about the purchase cost because I don't want to confuse people, but the value of the property is $100,000. I'm going to use easy numbers. The, the private or the hard money lender is only going to lend up to 70 or 80%. So let's just use 70%. They're going to give you 70,000 to purchase the property. Now, the great thing about hard money, the great thing about different lenders, all the terms are different. That is the beauty. Although there's the ugly side of hard money, but there's also the beauty, because there are different ways that the deal can be structured. And I'm not going to go into deal structuring now, because you may have to take into account that the hard money lender may just only give you money for acquisition, but you still have to come up with the money for construction, or they may couple the two, whatever the case may be. But let's just say this hard money lender is going to lend $70,000. We're just talking about the lending portion of ARV, which is $100,000. That difference of the 70 and 100 is $30,000. $30,000 of that money has to come from somewhere. Because think about it. You still have more money that needs to be in the transaction. Now, it doesn't mean that whatever the hard money lender lends to you may not purchase a property. It may cover the purchase price of the property, because the purchase price of the property is lower. But see, the lender wants to see that you have some skin in the game. Because a lot of times that 30% that they are saying that you are responsible for may consist of the interest, the fees, the points, or what have you. So now you may have heard of a term called skin in the game. Well, a lot of times the hard money lender wants to see what type of skin do you have in the game. Now, they don't care where you get the money from. You can borrow it from a friend. You can use your own money, which, of course, who wants to use their own disposable income? Or that's where I come in, the business funding piece. Because one will say, well, Aurelia, what does business funding or business credit has to do with real estate? That right there, the difference between what the hard money lender is going to loan you. Okay, I think I am back. I apologize for that. You know me, I never have my phone charged up. But anywho, wanted to finish up. I'm actually holding my phone, so I'm not going to be that long. But I had it on a tripod, but now I'm holding it. So like I was mentioning, so there is a difference between what, I think I'm back on, yeah. There is a difference between what you are responsible for and what the hard money lender is going to put into the real estate deal. So remember, the hard money lender is only going to lend 70%. You, on the other hand, is responsible for 30. So where does the 30% come from? The 30% comes from either your own money, but who would want to do that? Who wants to use their own disposable income? Or it can come from business funding. And that is where I come in. Like right now, what I do offline, outside of the whole YouTube world, is that I am able to help people be able to fix the difference between what it is that they want, the difference between what they're acquiring in real estate. Okay, I don't know what it is, but it's like, okay, I don't know what it is, but it's like screensaver. But I may have to do a part 2 version of this, so I really do apologize. But as I was saying, I was giving an example of that's where the business funding piece comes from, because it fills in the gap of what you are supposed to put into the deal. So once again, I am going to wrap this live up because I don't know what's going on. My screensaver keeps coming on and the video keeps turning off. So I'm not even sure if I am live. But if I am, you want to learn more about this topic. Hey, how you doing? I'm Henry Jean Baptiste. Thanks for joining me. Please watch the beginning part of this video because, like I said, I'm having some technical difficulties. The screensaver keeps coming on, the video keeps turning off, so it keeps pausing on your end. But if you want to learn more about what I was talking about, I have a free webinar called Access to Business Capital, Your Funding Plan for 2020. And what I plan to do is I'm actually going to be putting together the funding plan for real estate investors, talking about how the business funding piece can help you in real estate. This is what I do offline. I want to be able to share with online because what I've noticed is that, you know, a lot of times I have two separate messages of what I do offline and what I do online, and I kind of want to mirror them both the same because I do feel like there are a lot of people who can really take advantage of this information. So if you want to get access to those webinars, please get on to my email communication list. You could get that by going to bizcredit.yourmoneymentor.com. You know, I don't try to be perfect with these YouTube videos because the nuggets and the information is in what I share. And so, you know, if you find value in it, you will, you know, definitely be able to get some takeaways away from it and be able to flourish financially. So that is it. Like I said, go to bizcredit.yourmoneymentor.com to get access to that free webinar. And also, if you want to talk, if you have some questions about business funding and how I can be able to help you, especially if you're a real estate investor, please give me a call.